Crypto gave you 100% upside, but also 100% scams, volatility, and rug pulls. What if the next big wave in crypto isn't another meme coin, but real buildings, real tenants, and real passive income turned into digital tokens? There's a famous line, the best investment on earth is earth. In this video, I'm going to show you how the idea meets crypto through RWA tokenization and tokenized real estate, and why a lot of serious crypto investors are quietly moving into it as their safe yield strategy. If you don't know me, my name is Johnny Zhang. I'm the founder of Premium. Over the last decades, I've developed and managed over $2 billion in US real estate, including ground-up developments, value-add properties, and funds. I've lived that quote, the best investment on earth is earth, for my entire career. I've built it, managed it, raised capital for it, and held it long-term. Now I'm building Gaia, a technology platform that helps bring real-world assets like real estate onto the chain so that the global investors can access them more easily. On this channel, I share what I've learned as a boots-on-the-ground real estate sponsor, so you can make smarter decisions with your money and hopefully find your own wealth opportunities. Let's get into it. Let's start simple. What is tokenization? Tokenization is just a fancy word for this. Taking something that exists in the real world and representing the ownership of it with digital tokens on a blockchain. That something can be a building, a portfolio of properties, a revenue stream, a loan, even things like art or gold. When people talk about RWAs, real world assets, that's what they mean. Real assets being issued, managed, and traded using blockchain technology. So instead of a PDF in some lawyer's email inbox or a paper certificate in a cabinet, ownership is now encoded in digital tokens. Those tokens are programmable, can be split into fractions, can be transferred globally, can interact with other blockchain systems. Tokenization doesn't magically change the asset itself. A building is still a building, but it's completely changed how people can access and trade it. Real estate is one of the best use cases for tokenization. There's a reason people say the best investment on earth is earth. Real estate has been a wealth building machine for generations, but for most people, it has been hard to access today. Traditionally, real estate has three big problems for regular and global investors. Number one, high minimums. To get into good real estate deals, usually you need $100,000 minimum for single families, $1 million minimum for commercial properties, and sometimes $10 million properties for a bigger commercial property like hotels. With tokenization, it can fractionalize ownership. That means someone can now come in with $100 or $1,000 and still get exposures to a high quality assets they normally would never touch. Number two, liquidity. If you own a building, you can't sell one bedroom or half a bathroom when you need cash. Real estate is famously illiquid. By tokenizing ownership, you can now create a structure where you own a fraction. That fraction is represented as a tokens. Those tokens now be sold and transferred to other. It's still not as liquid as trading meme coins on DEX, but it's a massive improvement compared to traditional private real estate. Number three, geographies. If you live in another country and want to own US properties, it's a nightmare. Legal, banking, taxes, entity setup, management. Tokenization now offers a way for global investors to access US real estate without flying around the world or dealing with tenants and toilets. So high minimums become lower, liquidity becomes more liquid, local access becomes a global access. That's why tokenized real estate is exploding. If you are watching this, there's a good chance you are already in crypto. You've seen a token go up 10 times, a protocol vanish overnight, a guaranteed yield farm blow up, and influencers sharing tokens then disappearing. At some point, you start thinking, I still want the upside, but I'm tired of the roulette. I want something real, something that actually pays me cash flow. This is where RWAs come in, especially real estate. Crypto investors today are looking for stability, yield that comes from real activities, rents, revenues, etc. Assets that don't go to zero overnight. Something that pays them while they sleep. Diversification from the pure market sentiment. Real estate already does all of that. Tokenization just puts real estate into language that crypto investors understand. Tokens, wallets, digital ownership. So a lot of serious crypto holders are doing something like this. Keep parts of their stack in higher risk, higher side plays, and put a portion into tokenized RWAs to secure more stable long-term wealth and income. They're not abandoning crypto. They're just building a base layer of stability underneath it, with assets actually proven over decades. That's the best investment on earth is earth. Let me walk you through a simple structure. Step one, legal entities owns the property. A real estate asset, say an apartment, is usually owned by a company like an LLC, a corporation, a trust. That entity holds the title to the property. Step two, the entity issues securities. That company then issues shares or membership interests or other type of securities. These are the legal instruments that give you the economic rights to income, to profit to a share of the value. Step 3. Those rights are now represented by tokens on blockchain. So instead of tracking ownership in a spreadsheet or a PDF, you record it using a smart contract, digital tokens that follow a security token standard. Each token represents either a share or a fraction of economic rights, depending on the structure. Step 4. Investors subscribe under regulations. Investors come in under regulations like Reg D in the US for accredited investors, Reg S for non-US investors, sometimes Reg A or others. This is where KYC and AML comes in, because those are securities, not random utility coins. So there are compliance requirements. Step 5. Cash flow and returns. If the property collects rent, is refinanced, or is eventually sold, then the profits can be distributed as dividends or yield, or reinvested depending on the business plan. And those distributions can be sent in fiat currency like US dollar, or stablecoin like USDT or USDC, or through other rails depending on the platform or jurisdictions. Step 6. Secondary markets. After any legal lockup period and subject to regulations, those tokens may be traded peer-to-peer or on a regulated alternative trading system, ATS. This is how tokenization brings traditional real estate closer to the kind of liquidity and accessibility that crypto users are used to, while still being anchored in real-world assets. Let's be honest, nothing is risk-free. What tokenization does not do: it does not remove market risk. It does not guarantee returns. It does not magically make a bad deal good. So if the underlying property is poorly located, mismanaged, or over-leveraged, tokenization will not save it. So what tokenization does do: makes ownership more transparent, make record keeping more reliable, reduces some intermediaries, make it easier to onboard global investors, create potential path for better liquidity. So you still have to look at who is the sponsor, what is the track record, does the business plan make sense, is the deal overly risky, or is it conservative? Tokenization is just the better plumbing. The quality of the water, the actual investment, still matters just as much. Right now, you can see a clear shift. Large institutions are experimenting with tokenized bond funds, tokenized money markets, tokenized treasuries, and tokenized real estate. Why? Because the benefits are obviously at scale. It's faster settlement, it's real-time transparency, lower back office costs, easier global distribution. And on the crypto side, RWAs are becoming a basic layer of yield, a bridge between DeFi and TradFi, a way to bring real collateral on-chain. So instead of entire crypto markets being built on leverage, speculations, circular asset that only exist in crypto bubble, you start having real income-producing assets on-chain, the properties, loans, invoices, real businesses. That changes the entire risk profile of the ecosystem. For many investors, RWAs, especially tokenized real estate, will become the foundation of their portfolio. Then they layered higher risk plays on the top. There's a reason global investors love US real estate. They see strong legal system, stable currency, the US dollar, deep rental markets, and long-term appreciations in many regions. Asset financing, clear ownership structures. When you combine the stability of US real estate with the efficiency and accessibility of blockchain and tokenization, you get something very powerful, a way for someone outside of the US to own a fraction of professionally managed income-producing US property in a digital format they understand, without flying here or running the assets themselves. I didn't want to just talk about this in theory, so I created USP, United States Property Token. It was my first large-scale experiment in tokenized real estate. With USP, we've already tokenized over $61.1 million worth of US real estate, real assets, real tenants, and real cash flow, wrapped in a structure that global investors can access more easily. For me, USP was a proof of concept that the idea the best investment on Earth is Earth still holds true. But now you can access that Earth in a digital, fractional, global way. That experience with USP is the big part of why I became so convinced that tokenization is not just a trend. It's a natural evolution of how real estate ownership should work. After running traditional funds, developments, and then USP, I kept hearing the same thing from investors. I didn't live in the US, but I want exposures to your deals. I don't have $100,000 to start. Can I come in smaller? I'm comfortable with crypto and stablecoin. Why can't real estate work like that? And I realized the bottleneck wasn't the demand. It wasn't the asset. It was the infrastructure. That's why I built Gaia. Not as a toy, not as a pump, but as infrastructure designed for you, for global investors who want real-world income-producing assets, but in a format that feels as simple as using a crypto app, with clear information, easy reporting, and professional sponsors behind the project. So just to be clear, Gaia is a technology platform. It's built to provide tokenization infrastructures, investor dashboards, reporting, and communication tools. Gaia is not a broker-dealer. Gaia does not give investment advice or guarantee returns. It's the rails, not the product. My mission with Gaia is very simple. Take everything I've learned from building and managing over $2 billion in real estate and open that world up to people who never had access before. If the best investment on earth is Earth, then my job with Gaia is to make sure that Earth is more accessible, more transparent, and more usable for you, wherever you live, whatever your starting point is. So to wrap this up, tokenization is just a better way to represent and manage ownership. RWAs are real assets, like real estate, coming onto blockchain rails. Tokenized real estate combines with the stability of property with the accessibility of digital assets. If you are a crypto investor who is tired of scams, rug pulls, 90% drawdowns, you don't have to quit crypto. You can simply rebalance. Keep parts of your portfolio in a high upside place and put parts into real-world income-producing assets that are now available in tokenized form. If you want to see what tokenized real estate looks like in practice, you can create a free account on a platform like Gaia. Click around the dashboard, learn how RWA tokenization feels from the inside. You don't have to invest, just educate yourself. Because if it's true that the best investment on Earth is Earth, then understanding how that Earth comes on chain might be one of the most important things you've learned this decade. If you found this video helpful, hit the like button, subscribe to the channel, and drop a comment, RWA, if you want more deep dives on tokenized real estate and real-world assets. Thanks for watching, and I'll see you in next one.